All righty. Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with your favorite analysts from Trade the Chain. My name is Nick Mancini, joined by Monte and CJ. We are here to break down everything going on in crypto, macro, TradeFi, and everything in between. Good morning, Richard. Appreciate you hopping in chat early. As always, if you do have a couple of tickers, crypto, equities, whatever it is, feel free to throw those in there, and we will get to those towards the end of the session. But today, we are coming off one day after CPI. We had a PPI in retail print this morning, and we have FOMC next week, which is expected to be a pause. So let's go ahead and quickly just discuss, CPI and PPI really quick. Let's set the tone. So CPI, came in more or less as expected, slightly hotter, 3.7% versus 3.6%. And again, this is higher than the last month, but the saving grace, as I would call it, is core, which came in directly as expected at 4.3, which is down from the previous month. And for the mostly the rise in CPI was due to gas costs, and that is gas and oil, I should say, which is very much out of anyone in the U.S.'s hands. Obviously, Biden was pulling away from the SPR. That was kind of the one trick in our bag that we had. So this is just due to OPEC and Russia simultaneously, doing supply cuts, which is more or less probably just to kind of stick the middle finger to us. But obviously, they make some more money from that. So the general consensus is the trend is still moving lower. If we get another hot CPI print, meaning it's even or higher than what it came in at this time around, then the market will probably take that in a bearish fashion. So CPI, a wall of worry that we climbed is probably the easiest way to say it, but it doesn't mean it's completely behind us. And then PPI came in slightly hotter than expected, as did retail sales. So this is conflicting. Obviously, if PPI is moving higher, it kind of implies CPI may move higher as well, because if producers are paying more, you can bet that the consumer will too. But with the consumer still spending, that also influences a hot GDP, functioning economy, strong consumer, not a recession, kind of more or less. So that's kind of the story today. You got a lot of conflicting data going back and forth, and the market's basically saying trend is still in the right direction. If we get two bad prints, I'll start to worry. Without two bad prints, I think everything is fine. So CJ, Monte, would love to hear your kind of take on what's going on. Clearly the market, climbed that wall of worry around CPI, but with a really hot retail print and then PPI also increasing, do you think that the market, obviously we're pushing higher, and I think we have a chance to move even higher, but do you think this is almost kind of, squeeze the shorters, kind of trick the bears type of rally, or do you think this actually has some legs to where we could reach, local highs or possibly all-time highs in the heel of this?
Go ahead, CJ.
As far as Bitcoin, I think we're still looking at that target of about 27.4. That's where the 200-day and 50-day meet to create the recent death cross. In 2019, we pumped a little bit beyond that, and it was actually, I believe, Monty, what was it, like a 30 or 40% climb in only a couple days?
Yep.
Now, we didn't close above it, but there was a hell of a wick back then. So perhaps we see something similar, but obviously to a lesser extent, because we have a much larger market cap nowadays. I have no idea what will happen after that. I kind of just assume Bitcoin chops around until equities make all-time highs, if they can. As for equities today, I think something that was really interesting last night is that we saw the equity put call ratio spike above 1.2. Here, let me just share very quickly. So in equities, we had it go up to 1.4. The total, though, however, was 1.27. And as we've discussed, previously on the show, many times where we come close to this green level, we've seen local bottoms. And, in the last 2 weeks, we've seen local bottoms when we've spiked above the level of 1.2. So I think that is just indicative of still some fear that's prevalent in the market. And it's very unusual to see a day where you have DXY up basically its best day in the last month, and then things like Russell also really performing well, and the NASDAQ up almost 1%. Now, obviously, that's on the back of European central bank hiking, but still kind of cool to see that inverse correlation going on.
Yeah, I mean, I'm looking at the crypto and equities tickers, and it's tough to find red. Some of the obvious ones like ApeCoin and stuff like that. But mostly everything is green. I think Bitcoin and ETH up 1% in 24 hours as well. So definitely interesting there. And kind of along with what you're talking about equities, I think a lot of people just want to keep shorting every single move. And we know here, you don't short every move. You wait for the opportune moment, and people just kind of seem to just keep stacking every chance they get. So we've also got that Binance kind of FUD. We've got these Binance US departures that seem to make everybody short BNB and majors because they think that there's some sort of larger issue, and there could be, but it's just Binance US. Now, if Binance Global, if I start seeing chief legal, chief risk, CFO start departing, then I'm going to get worried. But I think that those fears are misplaced. And obviously with the FTX news, thinking about it from a grand scale, and we kind of talked about this in the TTC chat yesterday, if everybody, the market obviously front ran FTX news, and we also discussed, if you remember Monday, there was a soundbite in which I mentioned maybe we pump on CPI into the end of the week, while FTX is, that news is front and center, we squeeze, and then we end up selling off into the end of September, October. And I think that's still very plausible, because I'm not going to fight FTX selling. But I think if you're shorting after a front run move when the news hits, that's not the best day to short. So I think we're going to see a lot of that pullback. And I definitely saw a lot of longs enter as well. I'm going to go ahead and pull up my Bitcoin chart. And as you can see here, we're at the most open interest since the grayscale pump back in end of August. That was the grayscale pump, right? Or was the grayscale? No, that was the grayscale pump. So we're at the same levels of open interest. So once open interest starts getting to this kind of 95K level is when I will start getting concerned. And that also kind of lines up with what CJ mentioned as that 24 or 27.4 level. I don't have it lined out directly on the chart because it doesn't match with any of the levels that I'm really trading. But if you kind of think about Bitcoin making its way up there, I would also assume that you're probably going to add another 5K, 3 to 5K in Bitcoin open interest on the way up. And then what happened here? All those longs closed and then dumped us straight back into the 25K level. So not saying that this exactly will happen, because this seems to be a much more choppy run up rather than just an immediate spike higher. But I think that's something that you should definitely be looking out for, because although there is no exact science to charting open interest, it still very much operates inside of a range. If you kind of start to just line up some levels here. So I think that's something to pay close attention to. Not an exact science, but if you start thinking about, okay, if we do move higher, what levels do I want to target? What do I want to see? Well, I want to see a crap ton of open interest come in, and then I want to see us extend into this range. And then if we break back down out of the range, I'm going to short like a freak. But if we break back and if we continue higher, then longs certainly look good, possibly all the way up to 28K or 29K. So it'll be very interesting to see, but I'm definitely in the camp that I think we can squeeze higher. This is a good looking formation in my opinion. But I think the one red herring that I would look out for is, possibly a swift rejection above 26.8. A lot of people are going to be expecting kind of the 27.1K level. Let me zoom out a little bit. A lot of people are going to be expecting this 27.1K level and that 27.4 level that CJ lined out. So if we see very sharp rejections off of those levels, then you could see, shorts coming in very quickly, and then and possibly another repeat of what we saw up here in this level. So that's what I'm looking at. But Monte, I know you had a couple of feelings about Bitcoin as well, and you actually made a really good trade call earlier in the week in terms of Bitcoin. So how are you looking at things right now? Are you also lined up with kind of the 27K, mid 27K targets Yeah, are there any other indicators that you're looking for possibly exiting or entering shorts? Mute.
Thanks. Sorry. I think the question we need to be asking ourselves is, like, obviously right now everyone's eyeing that 200-day moving average as the next target up for Bitcoin. But I think what we need to ask ourselves is, can we get to that level with equity markets not reaching new all-time highs? Because to go all the way back, circling all the way back to the beginning of the show, when you kind of, asked, is this a genuine move of strength, or is this just kind of, bears getting squeezed? Again, I do still think this is just bears getting squeezed, and this is just another lower high in a series of lower highs after we made our top here in July. And you know I expect negative price action to continue in the equity markets eventually. Today actually surprised me with, the amount of strength we're seeing. But again, I do think it's shorts covering. And then also, like CJ mentioned, the DXY absolutely ripping to the upside. That to me is probably the biggest indicator that this isn't like genuine strength from the equity markets. Now, of course, like CJ mentioned, the European Central Bank, they hiked rates, and the euro dollar is falling very quickly, thus contributing to this up move in the DXY. But I think nonetheless, if you have this narrative failure where you have the DXY breaking out of this range, breaking above the critical 105 level that's been struggling to get above since basically all the way back in May was the first time we retested it. And really, we didn't get that much above it in April, or back in, March. So throughout all of 2023, like, we're approaching 52-week highs for the dollar, or not 52-week highs, but year-to-date highs for the dollar. And I think that is all you need to know about, what may happen in the equity markets. I expect more continued weakness in the equity markets. I think Bitcoin can and will make a move up to 27K, but to continue above that, I think we need equity market strength. I think we need all-time highs in the NASDAQ and, in ES, and I don't think we're going to get that anytime soon. So for me, yeah, I do still think we're going to make a move up to this moving average here. I mentioned today that, if we did close above this highly critical level here of 26.2, that'd be adding. And we closed basically right at that level. So I just said, tie goes to the runner. I'm going to add to it anyway. And yeah, I'm content with riding it up to this level, but I will be looking to sell at this level because without equity market strength, I don't anticipate us having the ability to get above that level, because although there is an increase in open interest, like, it's just the spot volume and the general interest in buying Bitcoin just doesn't seem to be there right now to propel us above like 32K. So enjoy the move up to that moving average while you can. But I think after that, we're going to see a sharp rejection.
Yeah, and I'll just to piggyback off that, I would be careful about entering late longs. I'll be honest, I'm in some late longs, just trying to play the volatility with a tight stop. Like, I think if Bitcoin cracks beneath 26.5 again, even 26.6, then it definitely gets tougher to head higher. And ETH has been looking honestly a little bit stronger than Bitcoin, at least in the short term. But if it breaks below kind of 1625, then it gets also pretty precarious as well. So it's certainly not a shoo-in, but I think that the favor is certainly on the bull sides before FTX really starts shoveling some of those assets off. And another one I wanted to talk about as well is Sol, because I know a lot of people are, I understand the narrative, and I understand that Sol, a good portion of it is locked via staking. But I mean, just imagine you're a bankruptcy lawyer, right? And we know from yesterday's court proceedings, I put it in the TTC chat, we know that they're allowed to hedge, and we know that they're allowed to sell 50 mil the first week, which would be this week, and then up to 200 mil per week following that, and they have about 1.2 billion in assets. So if you've got a bunch of locked sold, and you know that alts, and VCs are still going to sell alts, there's little interest in alts. Bitcoin is obviously the narrative around the ETF, maybe Ethereum. Then what you're going to do is you're going to sell your claims to your lock stake via OTC at what you think a fair price would be. And then you're probably going to short the rest of it to maintain the hedge because you're selling OTC at lower prices. And eventually that will matriculate into the market, very similar to what happened with CRV. So in my opinion, the narrative around, a bunch is locked, it doesn't mean they can't sell claims. They could sell, someone could say, I want to buy all your locked SOL for $5. And then they buy that. And then FTX also shorts it down to $5 because they know that the market will eventually reach, some sort of equilibrium, fair prices, efficient markets, whatever. But just think about that. Just because it's sitting there does not mean they're not going to do anything with it. So I'm still a bit bearish alts altogether, even though they can push higher. But I mean, let's pull up a few charts right now. So this is the Ethereum chart, right? Pretty moving up, higher since yesterday. Let's pull up, like a Pepe chart. This is, that there's no strength here. Bitcoin is well above where it was trading out on Tuesday. Same for ETH. Let's, what's another one? Rollbit's actually looking pretty well, but still much farther down. And I mean, you can really just start going through the list. I'll even pull up Sol, and yeah, it's moving up, but it's still below where it dumped last Saturday. And sure, it can definitely make it maybe all the way up to 20, but these assets are trading much weaker compared to Bitcoin. And I think the only thing that I really am interested in trading right now, in terms of at least longing, are majors, i.e. Bitcoin and Ethereum. So I know, Monte, you were kind of talking about that dot trade that we had discussed last week, and you were saying that you may add or do a dot Bitcoin short rather than dot USDT short, just to play a little bit safer while Bitcoin's rising. So do you kind of agree with the thesis that I'm putting down? Like, alts do not look sexy, even though they are incrementally rising this week. They're still performing much worse than the majors, correct?
Yeah, 100%. I'm in the same boat as you. And I think that that's going to become a very important factor as we move up towards that moving average in Bitcoin and we get rejected. I think some of the fastest moving alts to the downside, and I think the best way to play the downside will be shorting assets via the BTC pair rather than just shorting them via USD. Because I think Bitcoin, although it will pull back from its moving average around 28K, let's say, if we do make it up there, or whenever we start to see the turnaround, forget about predicting levels. If we see Bitcoin start to pull back, it will pull back to a lesser degree than the altcoins. So what I would like to do is, short the alts with the Bitcoin pair rather than the US dollar pair. And like you mentioned, DOT is a great example of that. CJ and I talked about it briefly this morning, and credit to him for, posing that question. But like, if you take a look at the US dollar chart here for DOT, right? It's bouncing back, showing some signs of strength, mostly short covering, in my opinion. I still think it looks weak. Now compare that with the DOT BTC chart that looks a lot different. And it's
You
not.
want to talk about a secular trend? I mean, this has been one of the strongest secular trends of the last 2 years.
Yeah, 100%. And I don't think it's stopping anytime soon. So, like, if you look at these assets through the lens of Bitcoin, I think it gives you a lot clearer perspective on exactly how weak a lot of these altcoins are, or Nick, as you put it, how unsexy a lot of these altcoins are. I think DOT definitely fits that bill. And, when you look at it via the BTC pair, this looks very, very bad. And And the great thing about it as well is, again, like when you're talking about shorting, there's the big risk of, getting squeezed out of your position, a big sharp move to the upside, squeezing you out. When you use the BTC pair, it really kind of, we made the analogy this morning of like a ski hill. This is a much smoother ski hill, much fewer moguls, aka liquidations, and it's pretty much a bunny hill, nice easy ride down. And you could have ridden that trend down, basically all the way. Look at this. Since November of 21, it has just been basically down only. Very, very few short covering events when you look at the .BTC pair. So I just want to emphasize that importance. I think it is something that when Bitcoin does get up to that 20 set, or that moving average, and or when it starts to turn, I think you need to consider shorting these assets relative to Bitcoin rather than relative to USD, because I think Bitcoin will act as kind of a stable reserve during the time in which we see a lot of these assets crashing hard. So,
and it's important to remember just general context. Like Bitcoin and Ethereum, are pretty much the only projects that are not like VC backed or don't have, a lot of private backers still sitting in there. And most of these coins are still, under 5 years old. And if you know anything about, private equity or VC ventures, 3 to 5 years is typically the end of the cliff for vesting. So a lot of these people are going to be experiencing unlocks into the end of this year, into the end of next year. And obviously, if the focus is on Bitcoin and everybody is aware of what's going on and FTX is selling, it just adds a few more, check marks in the box of, maybe I should short these or just stay away and be patient if you are just bored with the markets. So, I think, spot on there. Bitcoin and Ethereum should be your main focus if you are looking too long. And then, top 50, top 100 alts should kind of be on your focus for short opportunities or potential, buys 3 to 6 months in the future. While we're on this topic, one thing that I wanted to bring up is, if you are looking for some excitement in the markets, I've been kind of trading this TRB asset, and for those who are curious, I'll go ahead and just drop this in the YouTube chat. It's coinglass.com. The funding rates, I'll just go ahead and short by Binance because, we call Binance the cartel. They're, the biggest exchange. So, and negative funding rates are typically bullish, and that's why they're green, just to kind of simplify it for everybody. But this basically means every time you long, you get paid to long. So you're pretty much just, you're getting that entry more or less for free, or even getting paid to do it most of the time, depending on your execution. So it doesn't mean you should just start entering longs and closing them. Bad strategy, but it does mean that there's, benefit to longing. And that's obviously why the TRB chart looks the way it does. So I've been kind of just trading around this, nothing crazy. But I don't even know what, I thought I had it on my list there. So I just wanted to pull this up. It's just been up only. And that's the power of negative funding. Is I don't know if this is a giant TWAP. I don't know if this is the cartel just doing cartel things, but I figured if it braked above 35, it probably would run to the top of this fib level, which is 38. I've been kind of using the fib extensions. I also used the fib extension on Wild back when I was very heavily bearish on it, down to 1.1. Now it's down to $1. So for these kind of coins, like if you can map out a really big move, run a fib extension, and it breaks above or below, depending on what your directionality is, it's usually going to run to these fib extensions because it just plays very technically. And if you even look at this chart, the fib extension is playing perfect. Perfect tap on the 618. Perfect tap on the 382. Cut down at the 786, perfect tap at the 618, broke above the high, and then has just basically absorbed the entire projection of the fib extension. So if you are looking for volatility and you're like, oh, what coins, I'm really itching to hit the green button today, or I'm looking for some volatility, go ahead and go ahead and sort these coins by funding rates, and you'll find some volatility. I mean, if you go down to BLZ, AXS, DeFi, all these, they've got crazy volatility. BCH is on there too. I think you talked about that on Monday, Monte. So
I've never
some good opportunities if you're bored.
I've never, in all my years of looking at the CoinGlass funding rate, I don't think I've ever seen a funding rate of negative 2.5% or negative 3%.
Oh, don't forget about band back in the day when it hit 5.
It did hit 5. You're right. That is true.
And if
The
you
thing
guys, this coin was trending. This coin perp was trending. I'll pull up the chart on that just because, like, I understand a lot of people do get bored, and sometimes longing or shorting Bitcoin and ETH can be a multi-day activity. And if you have, some extra hours, but this was the hot coin last week, and obviously, I mean, perfect Burge pattern. And I expect TRB to do that probably, in the near future. But there's a lot of volatility on that chart, so there's some action to play.
And yeah, you need to think about what that funding rate really means. Like, if you want to open, let's say, a $10 short position, you're only going to get $7.50 worth of equity in your position because you are paying to the long side. So, like, there are a ton of shorts that are trapped right now. And
shorts are paying a F ton of money right now.
yeah,
like they're paying a lot of cash to stay short, which is why
25% of their total trade every single time. Like, that is absurd. Like, that is just an absolutely ridiculous amount of money to be giving up when you're trading perpetual futures. Now, the thing is, when you see a number that high, it disincentivizes people from jumping in short. And that's what makes this so bullish, right? Is because it implies that there's not going to be a lot of people shorting this, because who's going to want to pay that absorbent rate of 2.5% or 3% to enter a short trade? But also, it tells us that there's people that are still in this trade short. They're kind of trapped at this point, and they're waiting for it to go down. And the fact that it's still at 2.5% tells me that there's still a lot of shorts that could potentially cover.
Well, check this out, Monte. I found this fascinating, and this was why I was like, this is definitely going to head higher. I don't know how the hell these guys are still in it, because I think this is up 50%, 43%. But this is all, I mean, trust me, nobody was longing. I mean, I'm sure some people were longing, but this to me was short interest rising with the price dropping. All these shorts right here are trapped, and rarely none of them have closed. They just really started closing up here. And so all of that is still trapped. So I'm probably not going to exit this trade that I'm in until we're back down to like 2 mil on open interest, because all these shorts are still trapped. And eventually, I mean, I think if it creeps over 36, they're going to have to start covering. Like, even if you're in a 1x short, you're killed right now. Like, you're murdered. And these people are holding on for dear life, and it just keeps, clearing every single wick. So, and this is another reason why, like, if you want to learn a little bit more, discuss some strategies and stuff, please, like, hop in the TTC community and ask us, because, this is where fortunes are made in the bear market. If you have one good long on TRB with your typical size, that's 50% upwards, with leverage. Or if you're just playing small scalps, if you just played this up, that's still a 30% move. Yeah. I mean, so it's risky, but if you play it well, and you play it, technicals, like on a drop, you do the retest long with a stop at the lows. That's your risk right there. It's clearly defined. So again, don't overextend yourself, don't get crazy, but there's some fun to definitely be had. And look at the most, the worst funding right now on Binance is, it's things are definitely looking a little bullish, at least in the short term. So I think that definitely matches up with what we're indicating. So this is GPT. Let's pull up this one just to see what's going on with that, because that's got some bearish funding. It's called Crypto GPT. Of course, this thing is getting shorted. Look at this.
I mean, it looks pretty illiquid, let's be honest.
Yeah, I don't even know. I just thought it was interesting because it was the exact opposite of the spectrum. But we can kind of pull away from that. I'll get off my soapbox there. But it's this is where you find the fun in the market if you are ever bored.
You probably should never be trading if you're bored, but I think there's a couple words that we have to remember, and the most harmful words in trading are "it's already pumped."
What are you saying? You got to respect the pump, or just stay away if it has pumped?
Yeah, that's what I'm saying. When people say, "Oh, it's already pumped," That's the assumption that, you know, it can't go higher.
100%. And I think that's why I go back and forth on the SOL thing, because I am generally bearish SOL. But I'm not going to say that it can't pump, because I'm sure that coin can go a hell of a lot higher than I think it can. And I really don't want to be on the fade there. I think we're getting a little creep in Bitcoin. There we go, back to local highs. So if we can get above 28.6 or 26.8, I should say, I have a feeling we're gonna get a nice big body candle. I think it'll even look better than this, in my opinion.
A big body candle.
Big body candle. Yep, hitting the gym on some HGH. But yeah, so some good news there are of course, it always feels good when your trades are coming to fruition as you're talking about them. So with that being said, I don't think there's anything else. Of course, if there is anyone in the chat, please feel free to pop in a ticker if you do want us to cover it. But I think, we're definitely looking good heading into tomorrow. But I do want to mention before we go, because we do talk about it every session, we didn't really pull the chart up, is DXY. This will impact risk markets, whether we like it or not. It's just when. So if this continues to chad higher, sure, equities also can chad higher. But I think that there's going to be a cap on that. And so if we see DXY just zoom up, up above 106, I would be shocked if we see equities above the September 1st highs, in my opinion. So I'll just kind of throw that out there, but that's just something that I'm going to continue to watch. I could be wrong, and many have been wrong theorizing on that before, but it's had too much of an impact in the recent term to just throw it away after there's 1 or 2 days of correlation. So do you guys kind of agree with that, or are you guys like, Nick, you're crazy?
Well, I mean, I always just like to put forth the opinion always that nothing has to happen. I think that it's interesting. People will say, looking towards Q4 and Q1, like if interest rates are at a particular level, then therefore that can't be good for the stock market. Earnings will go down, and therefore, stocks will go down. But perhaps the stock market will like, an interest rate that is slightly lower than maybe our current point. But like nothing has to happen. We can have these correlation breakdowns. In the .com bubble, there was a long period of time where the DXY and risk assets went up in tandem. So we'll see. Yeah. But I mean, that definitely has been the correlation and the relationship of being inverse. But I don't think that has to always remain. We'll see.
And you got to remember, there's other catalysts at play than just the U.S. equity markets, right? We're talking about the DXY, which is a global basket of currencies, and the European Central Bank hiked rates. Thus, if you look at the euro dollar, that chart looks. I'll actually pull it up real quick. I think it's worth mentioning while we're talking about it. I mean, this chart looks as bad as DXY looks good.
It's about to be what your favorite shitcoin looks like in a couple of weeks.
Yeah, right. So, there's other catalysts at play that are feeding into the DXY's positive price action. So there's no reason to assume that just because the DXY is pumping, we have to go down in equity markets. There's other factors at play, like the European Central Bank hiking rates. So now that we've seen that happen, I'm curious to see where the dollar is going to go from there. We're above 105. Can we maintain that level? If we stay above 105, then yeah, I do think it is bad for risk on assets. But right now, I think the positive price action we're seeing today is not due to people being risk off or flooding to risk off. And that's evident from the charts, right? I think that we're seeing the DXY rise because euro dollar is falling. And it's as simple as that.
All good points. And I think that the final note I want to make is what could be a bearish catalyst outside of, DXY or, aliens actually making contact with humans. It's the one joke I'll make because the Mexico news was cracking me up yesterday. But FOMC is next Wednesday. And obviously we're expecting to get a pause in terms of hiking. but the press conference will be the first and most serious indication of what the November meeting will entail. And if Jerome Powell is very much indicating that another hike is plausible in November, that could be a bearish catalyst. But also, on the other hand, if he's implying that they're very happy with current progress, which I think would be difficult to say with the CPI print moving or inching a little bit higher, is that, they're going to, there's going to be no more hikes in 2024. So that language will be very important to listen to. And obviously, we've seen a lot of front running into these kind of prints. We've seen front running into CPI. We've seen front running into PCE. We've seen front running into FOMC. So I think whatever momentum that we start out with next week could certainly be what we hold on to heading into the end of September. So that's kind of the one big thing. We'll obviously talk about this in depth on Monday, but that's the big thing that I'm looking forward to now that CPI is behind us. So with that being said, CJ, Monte, any final notes before we exit and go enjoy some sunshine?
Yes, but Monte, you go first. I want to pull up a chart.
I got nothing left, so pull up that chart, my friend.
Monty's just waiting for his longs to print.
All right. Let's not forget the seasonality pattern that everybody was expecting, down in September, October, rally into the end of the year. So, we haven't declined. I mean, obviously the first 10 to 14 days have been pretty bad, but as one of my favorite friends would say about trading, a lot of game left.
I agree. I think I still think we can. I'm just happy that we're getting some volatility. Because there was a moment there where I thought we'd be chopping in a $200 range for weeks on end. So, actually, this is just one thing to leave us with is we kind of got a little bit about what I was worrying about, but I'm not going to worry too much because we did experience the same thing here. So as long as we're above kind of this level here, I'm not too worried, in my opinion. So, but always, red flags being going to pop up when you see sweeps up to key levels. So just something to monitor. We did see that the same thing last night, and then it moved higher. So this market is a bit tricky, but I'm gonna hold on to my trades for the time being. So getting some of that OI. So a short got murdered right there. We'll find out. Well, let's see if we have a not too big. I'm seeing 130K short got carried out, which isn't too big. So but yeah, this is the signal that I was looking for. If this starts really pulling back, then I think you can take a pause on longs. If this kind of starts to creep up again, got some buy volume creeping up there. That's a good sign. So but this is welcome to my schizo mind while I day trade. So we'll go ahead and leave it there. Good luck. Happy trading, everybody. Again, we are sponsored by Didex and BingX, centralized or decentralized, centralized trading options. Get a lot of great rewards through trading on those venues. And of course, decide what you want your risk tolerance to be with an account you own versus an account the exchange owns. And of course, very final note, 14-day free trial at www.tradethechain.com. If you want Monte, CJ, and my trade calls and daily research updates, that is the place to be, plus a beautiful data dashboard as exampled by the intro to the show. So good luck. Happy trading. See everybody on Monday.